In a significant development for India's venture capital space, Peak XV Partners, formerly known as Sequoia India and Southeast Asia, has announced a 16% reduction in its 2022 vintage fund, cutting it down by $465 million. This adjustment, driven by concerns over rising high market valuations in India, brings the total fund size down to $2.85 billion and reflects a strategic shift towards more measured investments. The company's decision highlights a cautious approach in an increasingly competitive landscape as it aims to navigate the challenges posed by inflated valuations in India. By prioritizing long-term stability over short-term gains, Peak XV Partners is trying to position itself to support its portfolio companies better. The company, which has been a key player in India's venture capital landscape, stated that they are making these adjustments voluntarily so that it will ultimately benefit their long-term vision. "We are defined by the choices we make," the company said in its official statement. They emphasize their commitment to investing in a measured manner, particularly in the context of what they describe as a quote-unquote richly priced public market in India. Now, despite the reduction, Peak XV Partners remains optimistic about its investments in India and Southeast Asia. They are talking about the strong portfolio performance and encouraging outlook for the region per se. The firm continues to prioritize early-stage investments, which have shown resilience even amidst broader market fluctuations. Interestingly, the venture capital scene in India is thriving. Global data reveals that Indian startups raised a remarkable $7.5 billion in venture capital across 780 deals from the months of January to August 2024. This marks a 53% surge in funding value compared to the same period last year, along with a slight increase in deal volumes as well. With India ranking among the top 5 global markets for venture capital or VC activity, it accounted for 7.3% of global VC deals and 4.6% of total funding value during this period. This robust activity indicates a vibrant ecosystem, even as some firms like Peak XV choose to adjust their strategies in the light of high market valuations. In a further sign of this strategic shift, Peak XV Partners has lowered management fees to 2% for 3 of its growth funds and 4 multi-stage funds. They've also reduced the carried interest for these funds to 20%. Peak XV's approach may seem contrarian given the current market exuberance, but they assert that this strategy prioritizes stability over the short-term trends that often dominate the investment landscape, reinforcing their commitment to fostering sustainable growth in the region.